Hello, I'm Elisa Zhang, and I'm a physician as well as a life and money coach. We're coming towards the end of the year, and so there's some things that you may want to try to do before the end of the year. And one of those things may be to do your IRA contributions. So technically, you can do this up until tax day, April 15th of the next year, but I like to do it in the calendar year. It just makes bookkeeping a little bit cleaner. So the backdoor Roth IRA conversion still exists. There was talk about phasing it out, but it is still here to stay for time being. And let's just talk a little bit about IRAs. So there are traditional IRAs and there are Roth IRAs. And so why do we always talk about contributing to a Roth IRA instead of a traditional IRA? After all, many people contribute to a traditional 401k or 403b instead of their Roth 401k or Roth 403b. And part of that is because with the IRA system, there are a lot of times where you can contribute to a traditional IRA and it's actually not tax deductible. It depends on a lot of things. So if you do have an employer-sponsored retirement account, then the contribution limit of whether or not you can tax deduct what goes into a traditional IRA is actually much lower than that $144,000 for a Roth IRA. And the numbers depend on whether you're single or head of household or filing jointly, but somewhere around $50,000, $60,000. It's also going to depend on other factors. So in general, it's just better to go ahead and put money into a Roth IRA if you can. And when you do that, then you're putting in after-tax dollars. That money grows tax-free. And then when you take the money out, it's also tax-free. Whereas with a traditional account, you get a tax deduction, which if it's an IRA, like I said, there are different rules about whether or not you would be eligible for a tax deduction on that money. And then you have to actually do that on your tax return. But if you were to do that, the money still grows tax-free, but then you have to pay taxes on withdrawal. You do have to have earned income in order to contribute to an IRA. Earned income meaning you made money from a W-2 or 1099 or your spouse did. So if you didn't make any money, but you're married to someone who did have earned income, as long as it's enough earned income that covers both of you, then that money can also be contributed. So the income limit for contributing directly to a Roth IRA is $144,000. So if you make more than $144,000, what you're going to do is the backdoor Roth IRA conversion. So you are going to put money into a traditional IRA, and then you're going to do a Roth conversion and move that money to a Roth IRA. That money that you put into the traditional IRA, you're likely not able to deduct taxes off it anyway, so then you might as well get the tax benefit of not having to pay taxes upon withdrawal, because if you just leave it in that traditional IRA and you don't get to take a tax deduction on it, then you're kind of losing part of the advantage. Yes, the money will grow tax-free, but you still have to pay taxes when it comes out. If you do the Roth conversion, which doesn't actually cost you anything, then you don't have to pay taxes when you pay the money out. So that's a big deal, and that's why you want to do this. Another caveat is that traditionally, you want to do a backdoor Roth IRA conversion if you basically have no money in a traditional IRA. If you had money in a traditional 403b or 401k, and then you moved it to a traditional IRA, so that money was tax deducted, then you don't want to mix that with money that's not tax deducted, like money that you're putting in on your own. If you do, it just makes things much messier. And if that's the case, you're going to want to talk to your accountant or CPA or someone to actually look at your personal financial situation to see if it's still advantageous to do a Roth conversion, which it may be, but it just becomes much more muddier. If you never opened a traditional IRA account, or your traditional IRA account in all different places is zero, you don't have any money in a traditional IRA account, then you can do the backdoor Roth IRA conversion just fine and not worry about all that. So I hope this video was helpful in explaining the difference between a traditional IRA and a Roth IRA, who can actually contribute to a traditional IRA versus a Roth IRA, and the advantages of the both, and the reason why you want to do the backdoor Roth IRA. So if you have any questions, you can always contact me. You can reach me at my website, growyourwealthymindset.com. I also have a podcast. If you love this kind of information, but you don't want to watch the video, you can always listen to my podcast. It's the Grow Your Wealthy Mindset podcast. And you can get it on iTunes, Google Podcasts, Podcast Addict, and hopefully whatever your favorite podcast player is. And if you do love this information, please subscribe to the channel so I can keep bringing more information just like this to you. Thanks for watching.